In today's Money Talks, we're joined with our experts with the University of Tennessee again. We have Celeste Carruthers. Thank you so much for joining us here today.
Thank you for having me.
Of course. Now, one of the big things that we want to dive a little bit deeper into is the student loan forgiveness plan. And so let's start with the question. I've heard a lot of people talk about this, even in our own place of work, about who's eligible. A lot of people say, I don't know if I am. How can they find that out?
Folks are eligible for that if they are students or former students who borrowed federal loans, and if their incomes today are less than $125,000 if single or $250,000 if married. So that covers a lot of people.
Yeah.
By some estimates, 50% of borrowers will have their entire loan balance canceled under this plan. But I should say that aside from this kind of new plan, there were three pre-existing and ongoing ways that borrowers could have their student loans canceled. So first, there was a program called Public Service Loan Forgiveness. And if borrowers end up working in nonprofits, for the military, or for the government, there was kind of a plan under which they could kind of make regular payments and have their balance eventually forgiven after a certain amount of time. Second, there was a program called Income-Driven Repayment, for borrowers who ended up with low monthly incomes relative to the required payment. They could get a reduced payment and ultimately have kind of loan forgiveness. And third, if schools have misled students about kind of the cost of enrolling or kind of the jobs that they could get after graduation, then they could have their loan balance canceled.
What about students who are about to take out loans and are really kind of navigating that path right now?
So students who are enrolling today who are taking out new loans are not going to be eligible for the cancellation part under this new plan. They still potentially have access to public service loan forgiveness and income-driven repayment and borrower's defense, which was that third kind.
Yeah.
But the plan includes some proposed changes to income-driven repayment that could affect students who are taking out new loans today.
The question being, with all this being considered, what does this mean for the future of tuition and borrowing and kind of more of the numbers of this here?
That is a big, big question, and a lot of it remains to be seen. But absolutely, those changes to income-driven repayment could have an effect on the decisions that students are making today about whether to go to college and where to go to college, and that could have follow-on effects on the cost of college and enrollment. By some estimates, this loan forgiveness plan and all of the attached changes to income-driven repayment and so on and so forth could cost $500 billion up to $1 trillion to the economy.
What else should people know before we sign off here today?
Well, borrowers will need to apply for loan cancellation, and they should pay attention to studentaid.gov for details about how to do that. And if folks might be eligible for public service loan forgiveness, there are some more temporary changes to that plan that makes it a little bit easier to navigate. Frankly, in the past, it was messy and really difficult to navigate. But those changes are a little bit more temporary, and folks need to apply for that by the end of this October.
Fantastic. Thank you so much, Celeste, for being in here with us. That does it for today's Money Talks. We're going to be right back after this quick break. Stick with us.